Boom. We're live.
Yes.
Ladies and gentlemen.
Good. Nick.
Too.
Great to have you. Thank you.
Nice to be here, man.
Nick flew all the way to Costa Rica just so we could do this podcast. That's literally what this whole thing is about right now. So this is how we're going to start. We'll have a conversation, and then at the end of this, we've got you guys in the live stream chat. You can ask us questions, but for now, Nick and I will just kind of go through chat, and then at the end of this, we'll be able to go through. Now everything's looking good. Give us the thumbs up. Okay, cool. We're streaming. We're live. Just want to make sure everything looks great. So Nick, we've had an extremely volatile time in the markets recently, and I'm sure a lot of people get scared. We're both veterans through the ups and downs of these cycles. Got any thoughts?
Yeah, I mean, it's interesting too, because like one thing that I really admire about you is you're focused on kind of the Wyckoff method of trading. So you're looking for this kind of accumulation channels at the bottom, distribution as well. For me, I'm someone who, for example, doesn't really use a variety of complex TA indicators. I mainly kind of understand that at the end of the day, there's buy side and sell side pressure. So as you mentioned, the accumulation and then the distribution where people start to take profits on the highs. And then outside of that as well, I really look for what price is saying. So I'm looking at, higher lows and higher highs for uptrends and lower highs and lower lows. So I think what was really interesting over the past couple weeks, back in kind of late April, we started to talk about how that pattern of higher lows and higher highs was slowing down, the momentum. The lows were getting closer, highs were getting closer to one another. And you start to see this almost kind of peaking top that, I don't think we've really ever seen in Bitcoin in the sense of an actual peak. We usually see these very parabolic rises.
Yeah, it's like a beautiful rounded top.
Yeah. And the thing for me that I was really blown away by is I never would have thought we would have seen such a dramatic correction. I thought we were going to get more of a maybe 25-30% correction. So for me, I basically was sitting on the sidelines, even though I saw those kind of lower highs and lower lows settling in, and altcoins were still picking off. So it just didn't feel like there's going to be any major correction. And then there comes, the high rates of collateral and liquidations in the market. So, we had I think it was a total of 8.5 billion in liquidations. We just checked it before. It's not the greatest or largest day of liquidations, but this is serious amounts of capital where people were taking excessive leverage at higher positions in the market. So you're going to get these kind of crazy, these crazy breakdowns in price, and then after that, again, buyers come in and take out that discount. So,
yeah, it's something we didn't really have in 2017 was the ability to access leverage. There was no, you had Bitfinex, but they were pretty small, and BitMEX and Bitfinex back in 2017, but they were pretty small in comparison to what you're averaging now. I think. When I looked at FTX on that morning, they had over $50 billion in transaction volume on that particular day.
And that's just one of the platforms, right?
Yeah, just one of the platforms, exactly.
Yeah.
And they're much more transparent about their actual volume as compared with their, any market makers or wash trading. But I think it just highlights, well, first off, if you're new to the ecosystem, don't fucking touch leverage. It's so difficult to get that game right. And instead of having an asset where you can just sit and you can endure the price fluctuation, one of the things I always try to remind people is you don't go and sell your house when the price drops or when the price changes all freaking. You're like, oh my god, the house of my price is up 30 cents. You try to ignore that if you know the value of something. And it's what spot buy really allows you to do is in comparison to leverage. Now, if you know how to use leverage and in the right moment, it's extremely advantageous.
Yes.
Like in March 11th of last year when the pandemic started, that was a great point to maybe use the 3x leverage. But in the middle of the markets at this moment, everyone gets excited. They're like, oh yeah, it's only up. The market's pretty much gone up. We haven't even seen a 30% correction. They're just primed to liquidate people. And I think there's a lot more longs at that point open than I even realized that had been opened back in I think it was, February when Musk signaled he bought Bitcoin.
That was a pretty big turning point. It's crazy to think that was back in February. If I remember correctly. Yeah. And one thing too, the thing for me, in regards to the way I've been approaching the dip, I had a good amount of people just ask me if I'd sold anything, and I hadn't sold any positions actually. The thing for me is I don't trade really on leverage, but you could technically say this is leverage trading in a sense. What I did was when there was a discount, pretty much near the kind of later 2 or 3 hours of the correction as we went through that, an absolute breakdown in price. It was a pure accumulation in that case. what I basically decided to do in this case is I had collateral locked up
Yeah.
in a variety of platforms. I was just earning interest on my assets. And the thing is that usually people want to, as their assets are rising up, they want to go and take on leverage because the value of their collateral is higher and they can borrow more.
Yeah, right.
Yeah. But the ironic thing is, like, for me, I try to do the opposite. So when there's blood in the streets, when my collateral or my assets in this case are at a lower value, I took out a good chunk of loans in this case on my crypto.
Yeah, margin, like a margin
Yeah,
trade. Basically.
it's a very low level margin trade. It's not like, on an exchange, as you mentioned, you could do 5x, 10x, 20x leverage. I don't want to touch anything like that because, any kind of any of these 30, 40% blowouts that are usually going to happen once every year in crypto. And
at least.
Yeah, at least, exactly. Yeah, we've seen previous multiple 30% or more corrections in the previous cycle. You're going to probably risk getting your account blowout, especially if you keep rebalancing and stuff. So for me, I just wanted to basically, at a low price range where I know there's low liquidation risk on my assets, put that in collateral, take a good sizable chunk of stablecoin loans, and go out and buy the dip on projects that I like. And that's proper use of credit, in my opinion. Even for pure speculation purposes, I feel comfortable doing that.
Yeah.
And I rarely ever do that, but it's when you get these opportunities, you take advantage of it. In this case, you don't want to just open collateral willy-nilly or use it as just like any other tool in the market. It's a very important tool that if you know how to use it right, it can be really good.
Yeah, timing is important for those ones too, just knowing the market. But I think in general, especially in these times, when you're in the middle of the market, the people that are showing up are generally people that don't have a lot of experience, and definitely shouldn't be using a lot of these tools to begin with, because they're out of the average capability or understanding of most people. For anyone that's new to the market, when you show up this late, you missed all the important time to get in the first place. And so you definitely did the first few things wrong. To think you're going to get it right this late in the game is kind of a...
Don't make two missteps by using a tool that you don't know.
Yeah, exactly. Yeah. When it's generally pretty simple. I recently read these two books called 100 Baggers and Dan Dow, and they just kind of go, 100 Baggers is really specific. It goes over, I think you said you started reading it, right? Some of this one?
Yeah, no, I did read through it a little bit because I like that kind of philosophy of finding bets that you do your own due diligence on.
Yeah.
And you just wait a long extended period of time, not trying to trade in the market day in, day out. So definitely more of a macro trader mindset for sure. Yeah.
What I like about this is 100 Baggers goes over all these different companies for the last 100 years that had you put 10 grand into it, it would turn into $1 million, or it would have gone up 100x basically. And we think that something's new in this cycle. A lot of people get fairly religious about, it's just a Bitcoin, or what's unique is that we have this opportunity to really play with asymmetry, these massive potentials for upside. We were talking about Michael Saylor earlier, and he's like, Bitcoin's the only asset. It's like, well, Michael, what about voice.com that you bought for $8 Like, if you bought a website, in the early 1990s, you could have bought voice.com for $8 and you sold it for 30 million. Yeah. That's probably your best trade. Probably do better than his Bitcoin trade, at least in terms of percentage gain. And I think often we overlook the potential of these asymmetric potentials, especially in the tech sector. No one's calling voice.com a shitcoin. And that was the real difference back in the early 90s. You just had people that were generally more aware of how the markets worked.
Yeah.
What I like what 100 Baggers did was really give you data from railroads to companies that sell tampons. Like, there's a huge amount of potential for upside if you know what you're investing in and when to invest. And more importantly, being patient, because most of those things that went up 100x took 5 to 12 years on average to get there.
That's the really unfortunate thing. I did a bit of a rant and rave on my channel about with the crypto sector. I mean, this cycle alone, if you're buying again during those kind of accumulation phases at the beginning of a cycle, if you can just know how to spot those macro shifts where you have 70-80% corrections, you pick up your positions. If you really want, you can explore healthy levels of extra leverage. But again, I don't see the need for it because you've already got great upside and momentum. Yeah. If you know how to trade those cycles, you'll do phenomenally well. And not to mention, as you mentioned, Tio, if you can do that due diligence, if you can find the key players in that sector that other people aren't willing to spend, a couple days, couple weeks, kind of experimenting with, researching on during that long, extended multi-month or year-long accumulation phase, you can make seismic returns that you just couldn't make in other markets before. And that's the really incredible thing about crypto. How terrible is it to let that opportunity go to waste by making a bad mistake of overexposing yourself through some kind of tool like leverage, at the top of a cycle, later on, midway through the cycle, and then you end up losing everything.
Yeah, unless you like roller coaster rides and losing your fucking t-shirt for no reason, it's not worth it.
Yeah.
Matic was a great example of that for us. I mean, I sold out way too early on that one, probably because I got used to the bear market cycle. I've been buying Matic at pennies, and then I see a 10x. I'm like, yes. I fucking killed. And then now it's at like almost 200x. At the last kind of at least at this particular cycle high. I think that this recent weekend, this shakeout, is such an important part because we get complacent. Like, new traders show up, they think that there is only up. They kind of ignore the macro cycle, the potential of these asymmetric returns, not realizing the volatility goes both up and down. And that was one of the other key points too, is for me at least, the pandemic was one of the biggest learning lessons that I will be able to take for me for the rest of my life. Like, there's something about, I don't know, a quote about board wisdom is fucking dangerous or something, but you'd always heard the idea of like buy when there's blood in the streets, right? And it's really easy, I think, to get that wisdom kind of wrong. But the pandemic, when people were literally falling over and dying in the street for the first time, like, that was a little blood in the street moment. And I had never experienced that before, not at least when I was old enough. Like, when terrorists attacked the Twin Towers, I was a wee little lad. When the financial crisis of 2008 happened, I wasn't old enough to give a fuck. I was hitchhiking around Central America in 2008, right? So this pandemic really taught me something about that, buy when there's blood in the streets. Because you get it institutionally speaking, right? Like, you can have moments like this. Like right now, technically, Kathy Wood, and for anyone that goes over some of the deeper on-chain value metrics, we've actually reset a lot of stuff back to where we were when the pandemic started. People were as scared shitless this weekend as they were back at the beginning of the pandemic, basically. But that moment for me was hyper crucial, because you don't need a chart to recognize a pandemic, right? You don't need a chart to recognize terrorists hitting two buildings, or the financial crisis of 2008. You didn't need a chart to tell you that people were ultimately fearful. And for me, I was always on the board wisdom idea of like, oh, buy when there's blood in the streets, like when there's the price is down. It's like, no, there are literal moments in human history when there is basically blood in the streets. And it's not a metaphor. For a little while, I thought it was like, oh, that's a metaphor. Like, you're talking about just when the candles are red. It's like, no, both, a lot of these situations, there is literal bodies in the streets at those moments. And I think it was a Baron von Rothschild's quote, so it's like a few hundred, like 150 years old or something, but that sentiment you can spot without ever looking at a chart. From now on, every time, like, I hope I'll be out camping, all of a sudden check my phone, like, oh great, there's like some chaos going on, like this is the moment to like fucking throw everything into the markets, because people are irrationally fearful, and when they're irrationally fearful, everything is irrationally valued at that moment. This is one of the biggest learning lessons, I think, for the rest of my life, is that peak fear moment, because I had never experienced it and been able to capitalize
and going to that point, that builds off what I was talking about earlier, where it's like there are very few moments. The unfortunate thing is that people really get caught up in the cycles they ride, and really you should be focused, any kind of smart investor, especially if you're dealing at, this deal, like again, we're talking about accumulation and distribution, with this, when you're talking about smart money, if you want to trade like a traditional major investor in any market, you're looking for catalyst events where you can get real discounts, and you have the liquidity and the volume to be able to get those discounts, and then vice versa as well. The actual profit potential, where you can actually lock in sales and be able to realize profit. No one's. I mean, these investors, the people that at least I know and I've looked up to, or that I've come to learn and observe about, who are trading institutional size capital, they don't give a damn about the day-to-day trade.
No.
Yeah, they're not caring about trading the market in a 24-hour interval. They're not worried about a day, a week, or even a month. They're worried about, how do I take out seismic positions in the low range and be able to sell on top. And again, it comes down to those few catalyst events in the market where, again, as we saw this past week, there was $1 trillion wiped off the crypto market. And just a couple months ago, the crypto market wasn't even $1 trillion. It's like, it shows, like, again, like, if you don't take upon yourself to be able to stay on top of those major opportunities in the market, and you're focusing too much on the day-to-day, investing in X, Y, and Z token, versus another cryptocurrency, you're missing out, I think, on the message in that case overall. And I've seen so many people fall trap to that. But yeah, it's again keeping that macro window and thinking about, how do I lock in profits and wait for those discount opportunities? What patterns am I seeing on the weekly chart? So,
yeah. And Grayscale, I mean, if you look at Grayscale's holdings on Glass now, they've been selling about 120 Bitcoin every day.
Yeah.
And give a fuck what the price is. Like, well, we bought it at $30,000, so we'll just keep selling it at anything above $30,000, and we're good to go. Yeah, the big institutional money plays a much different game. They play these really long accumulation sectors. They drive the price up, and then they sell slowly into what the retail can effectively handle. That price drop, we gone over it. This idea that there may have been some physical manipulation, and one of the things that's always interesting about the Wyckoff accumulation stuff, it ignores manipulation because it doesn't matter. Manipulation just says you have enough money to move the markets. I mean, that literally that's not manipulation. That's how the markets work.
Yeah, I was gonna say to you, the one thing I know, there's been that story going around with this correction about like there was like a forced liquidation in this case in the market.
Yeah, the 4chan post.
Yeah, exactly. And the whole thing about it is that I'm interested to hear your thoughts on it and stuff. I know we had chatted a bit about it before. Again, taking into mind whether the story is true or not, that there was this kind of forced liquidation, the really important thing to realize
there's a bunch of forced liquidations. They're aiming at one person. That's what the post said. The post was like, hey guys, I work with a big company that happens to work with the People's Republic of China. And for those of you that don't know, the People's Republic of China is basically like the Chinese version of the central bank and of the Federal Reserve. They have an unlimited amount of capital. Yeah. They could turn the printer on. They could decide to go short Bitcoin at $1 trillion at 3x leverage, and they could probably drive the price basically to zero to some degree, at least on the open market.
Right.
It's very thin, very, very thinly traded market that's already out there. But the guy who made this post on 4chan said it was specifically aimed at one person. And the Chinese Communist Party or the CCP has done stuff like this before. I went over today, I was like, look, they banned Winnie the Pooh because some guy made a joke about Xi Jinping looking like Winnie the Pooh. Like, clearly, if you have a feud with the People's Republic of China, like, they'll aim at you specifically. Yeah. They just happen to take out 800,000 other traders as well.
Traders, yeah. But like, here's the thing, right? Like, it's funny because I put out like a tweet the other day and stuff about how like what caused like the dramatic capitulation in this case, where we started to see prices go like completely like downward vertical in this case, like and the thing is, like, to that point to you, like, no matter, like, it's interesting, everyone is always kind of pointing at the story in this case, and I think that's very true. Like, there's a very good chance that could be the case, right?
Yeah.
The thing I always bring up is it's like the people who took on the leverage and the credit, it was there, right? It was just that someone had the capital to actually sell in and cause those liquidations. So at the end of the day, for me, like, the culprit I always like to point to is like, how did this capitulation candle come in? And it was people being overexposed.
Yeah, and a thin market book to begin with. One of the other data points I really like is looking at the open supply available on the market. And you and I were having a conversation about this earlier, which is the liquidity of the market versus the actual
derivatives market.
Well, and the price point too, right? You can go onto CoinMarketCap right now. Let's take Hex as an example. It says it's got some $1 billion market cap, but then you look at the automated market makers, the other places
probably $2 or $3 million.
There's no trade there. Yeah. You could easily flush that out with just a very small amount of cap, or a very small amount of the trade coming in the other side, and that's why it's such this supposed $1 trillion gap, is because when everyone turns around to run for the fire exit, there's no liquidity on the other side of the trade. Yeah. I think the automated market maker was one of the most genius things, because it showed me how easy CompMan can play his game. There's only 13% of all Bitcoin on the liquid markets, right? So you don't even have to move all of the supposed market cap price. You just have to move 13% of it.
Yeah.
With a few $100 billion on leverage, you could push the price pretty much any direction you would want to.
Yeah.
So it sounds at least like from that 4chan post that they were trying to aim at someone. They took the position. It was already thinly traded, mostly being held up by retail, where you had big whales trying to distribute their price to begin with, right? There was a point where it could have gone up just as easy, and it might still. What I love about this moment is that when you have those big liquidation washouts, and from a spot buy perspective, you could see $70,000 Bitcoin in the next 50 days. Just like this quick, because most of it was being held up by this very thinly traded market, this 13% of the.
And then order books can collapse, but they can also
be cleared it's only 10 to 13% of all the Bitcoin supply that's in the open market to begin with. Most of it's done either OTC or in the back end. But if you want to move the price in the front end, you need a very limited capital set, basically.
That's one thing I wanted to talk about is, back when we were at 50, 65K, where everyone was extremely confident about the state of the market, the one thing I think everyone was backing on, especially after February when Tesla had bought their $1.5 billion position, was that everyone was thinking, oh, the corporate treasurers are going to come in and buy Bitcoin.
Yeah.
And the thing is, it's like, I think people don't understand what a corporate treasurer is. A corporate treasurer takes massive balance sheets, almost like hedge fund size balance sheets for some of these companies. And they have to sit down and say, okay, we've got $300 million in cash, $50 million in different types of bonds, different types of fixed income assets.
Yeah, property.
Yeah, property, exactly. Yeah, like talking about all types of different assets people probably wouldn't even expect to be on, per se, like a balance sheet. And the thing is, they're not going to go out and just buy your magical internet money in this case, your 50, 65K Bitcoin at a really extremely high valuation. They buy a discount. So like this is the same thing with pension funds. They circulate out of equities and fixed income assets when certain markets are at discounts and other markets are extended. And it's the exact same thing here with cryptos, that now this is the time where corporate treasurers will come in and start building positions.
Yeah.
If anything, in this case, once you start to see a bottom, and again, you start to have that period of time where there can be accumulation in the market. But if it starts to move up quick enough, I mean, you really could get that spring shot off of kind of a slingshot move and stuff, as you mentioned.
Yeah, no, spring was the right word as far as I know.
Yeah.
I think that there's another valuable aspect to that too. A lot of people probably overlook is that because Bitcoin's such a volatile asset, if you put it on your corporate balance sheet, it becomes this impairment loss tool. So right now, because Bitcoin's down, for this quarter specifically, Tesla could write off that as a loss.
Yeah.
Well, although they didn't lose anything, technically they're still up. I think that they bought around $31,000, so they're still in profit. But if Bitcoin had actually gone below that, or if say a treasury did add at 40K, and when it was below, they could write that off. So if they were in profit, they could be like, yeah, we made no profits this sector. And even if they go up in profit, as long as they don't sell, they don't have to clock the win. So there's a huge potential for these corporate treasuries just to use it as a way to just not pay taxes. It's like, yeah, we lost money this quarter because Bitcoin's down. It's one of the things I think that some of these companies are probably adding it for. You're like, well, so if we do really well, that's great, and we can write it off if Bitcoin goes down. And if Bitcoin goes up, and as long as we don't sell, we don't have to pay taxes on it either. Like, yeah, okay, I'll take that. Like, why would you not want to add that downside potential volatility for your tax write-off? It sounds like a smart idea to me, especially on the long term. If you're thinking about like a treasury hold of an asset where you're like, okay, well, maybe we get a few quarters where we can just write off all of our profits. That might save you an extra few $100 million.
That's one thing that I always recommend to people. Like if you're, no matter what jurisdiction, if you have to pay taxes on crypto's tax loss harvesting, and it's as true for a corporate treasurer as it is for like an everyday individual. So that's one thing that, again, like if you do have it, for example, where
I'm grabbing a glass of water.
Yeah.
I'm still here listening.
Yeah. But just basically, for those who don't know, like tax loss harvesting, to kind of explain the brief concept of it, it could be, for example, that you've got a position right now that is in the red. You might have positions overall, you've made some capital gains on a variety of different trades and investments, but you've got a position at the moment that's also in the red. And it's technically not a realized loss. So what you can do is you can sell those positions. Thank you.
Cheers.
Cheers.
To water.
Yes, to water. The thing we're mostly made up of. But yeah, the really cool thing about it is that you can actually materialize those losses, and this is at least how it works in the United States. You can realize those losses, and that'll cut down your overall gains for the year, and therefore your tax obligation. And it's a completely legal thing to do. So it's a great tool and stuff if you're trying to be smart about your tax obligation and keep as much capital in the market as possible so you can keep investing for the next financial year.
Yeah, there's definitely beware of how to play your tax game. If you're doing your taxes yourself and you've made decent capital, just bite the bullet and find someone to do your taxes. It's worth paying them because they'll probably save you more money than it costs them.
That costs.
Just a heads up. So let's jump into some of the questions. and see. Okay, we've got some super chats. We'll start with those. Wendell LTF or LTC says, dry powder to buy in. Can you both name 2 coins that may do well this cycle? I love you both. Okay, let's you can start with that one, and I'll because they asked for both of us, but I'll let you start.
Okay. Yeah. So I'm honestly, Tio and I were actually just chatting about it earlier and stuff. Like, I'm still like, as much as it might seem backwards or behind and stuff compared to some of the new layer ones out there. I think that whereas kind of Ethereum's lagged a little bit in this altcoin cycle, not so much, I guess, in the sense of performance against large plays like Bitcoin, but the general DeFi and Ethereum ecosystem has been a bit stagnant. I'm very genuinely interested to see some of the larger cap plays in DeFi kick off here. Now that liquidity is still kind of maintaining within the altcoin space, we've got a pretty strong accumulation rebound. So for me, the one thing that I'm really still hedging my exposure to is Uniswap, the Uni token. And the reason why is because whereas it's been initially at the beginning phase of the altcoin cycle in January, did quite well, it's been kind of holding off, generally speaking, around its Bitcoin all-time highs. I think that with the liquidity provision updates that they have with Uniswap v3 and layer 2 scaling solutions like Optimism, I think there's a decent chance here that you could finally start to give that experience. And we've kind of had it natively integrated within Digifox, the ability to do swaps through Uniswap. That's something for me that gets me really excited when you have that combination of liquidity efficiency, and then outside of that as well, you have the layer 2 scalability. I think it's really Ethereum's last chance. And I say that because I'll be honest, you and I, like I said, we chatted about it before, like, I'm completely candid. Like, I've seen Binance Smart Chain step in. I've seen all the other layer 1 step in, Solana starting to make big moves and stuff as well. So I'm getting to the point where it's like Ethereum's got to make this work.
Yeah.
It's really got to make this work over the next, really the next quarter going into the summer. So that's one for me that I'm really interested about, and I'll kind of maybe pass over to you, T. I'll try to think about it.
So do one each, okay? Yeah, that's better. We'll both name one coin for the 2 coins. So I'm going to go with a layer 1 solution here, and I'm going to go with Avalanche. Now, the reason for that is because, okay, so it was 2017, and Bitcoin was at like, I don't know, it was like $700, and a good friend of mine was like, dude, you got to check out Link. It's this hyper exciting tech thing. And I never understood the tech of Bitcoin. Like, when I first got Bitcoin, it wasn't the technology that I understood. Like, I'm not a tech person. I'm just grateful my Bluetooth mouth works. Like, you know what I mean? I'm not a tech driven person. It was the concept that really sold me. And he didn't try to sell me on the concept of Chainlink. He tried to sell me on the tech side, and I just didn't understand it. So this time, when we showed me Avalanche, and he was trying to tell me about the tech side of thing, I was like, okay, well let me try to understand the conceptual aspect here, because Avalanche is another layer 1 solution. It basically does everything Ethereum does, but faster, and it's already incorporated like the EIP 1559. They've got the proof of stake mechanism. It's already set up and running at full scale. So basically everything that Ethereum is trying to be,
they've already got it set up.
Avalanche is already set up.
But they have a brand new consensus mechanism. I remember, again, we've been talking a lot about, like, I remember back in 2018, Avalanche was one of those projects that was like still very much in stealth mode, and it was kind of preparing for that next wave or that time to deploy it. And I remember like following a mean and like some of the early videos about the Avalanche consensus mechanism. Like, it to me, it was like really exciting to see some more high throughput networks. But outside of that as well, I mean, you've seen that, as you just pointed out and stuff, they have EIP 1559, the fee burning mechanism for any type of fees paid out and stuff being removed from the circulating supply. So things like that, it makes me interested for sure. I got to do more due diligence on it.
One of the reasons why I like it too is that one of the things that I loved about Bitcoin, and I like less about it now, it was more exciting to me when nobody realized how valuable it was.
Yeah.
Like, now that everyone recognizes it, I'm like, oh, great, so it's not as fun now. I like shit when nobody else knows it's cool. Once everybody else knows it's cool, I'm like, oh, we're done here. What's the next cool thing people don't recognize? Not to say that Bitcoin's not cool anymore. Obviously, it's still a genius technological evolution, censorship-resistant money. But I think that Avalanche represents as big as an innovation in this sector since Bitcoin. And that had Ethereum been more patient to what they were trying to build, that they probably would have come up with something more like this. And anyways, it's really always one of these difficult conversations too, because just because something's great technologically speaking doesn't mean that it gets adopted by the community, because people will go with what's easy. That's why Binance took so much liquidity. It's like, oh, it's cheaper. Like,
they were able to build
shit coins all over.
But that's the thing, is it has a lot to do with network effects. And again, that's, even as someone, again, I'm very exposed to the Ethereum ecosystem. I gotta say, like, it's incredible to see how much Binance has been able to achieve with Binance Smart Chain.
Yeah, the community.
I mean, it's incredible. I mean, like, to be, you can ridicule Binance Smart Chain for whatever, but the sheer fact of the network effect that it's built, I mean, it's incredible. And that's how basically protocols went out in the long term. And this is why Ethereum can't just, sit around saying that we're not going to provide any solutions for everyday people. It's why Polygon's taken off like wildfire. It's because you need to be able to provide opportunity for anyone to use your network, right? And the more network effect you can have, and sure, liquidity and volume matter, but at the same time, users as well very, very much matter. Especially as we've been talking about, again, if you're talking about providing a market for just institutional capital, you're never going to have those periods of time where you have retail volume that can actually help in and build cycles. So
and hype.
Yeah,
apparently
exactly.
too. Okay, so Matthew here says, can you each expand on how blockchain may impact charities or how charities run in the near future? We'll just let you lead. I'll ask, you lead, and then I'll double down.
Yeah, it's funny. I know Rudd, for example, who you know as well. He's one of my friends and stuff in the crypto space. He's working on building a charity startup. But I mean, in regards to blockchain, I think probably one of the best things you can get clarity on is verifiable payments. So one of the biggest problems that I've generally found with charities, and the thing is, I love doing charitable donations, but I do it to a very select set of charities. I don't just kind of shotgun spray, here's the donation and here's the donation. I really try to specify like which ones I know I can trust and I've done the due diligence on. The biggest problem that you have with charities, from what I can read, is knowing where the money's going to and how it gets from point A to point B. I've had people, for example, who will use cryptocurrencies as a way to get money from point A to point B, because the traditional credit card payment when you donate $100 ends up being anywhere from around $60 to $70 at the end of it, and that's not even including the inefficiencies in the supply chain of getting that money, which is now converted into buying goods and services, to the actual people that charity is supposed to impact. And then outside of this, well, just pure transparency's sake, it'd be great, for example, for transparency to be able to say that I made this donation, or I made this Kiva loan in this case to someone on chain. And outside of that, being able to use that for, again, I know a lot of people do donations for tax write-offs and stuff, etc. Being able to have a verifiable proof of that, which is really nice. So those are some of the things that hit my head right off the bat. Is there anything that you think of, Tio?
Well, just for fun, I'll take a contrarian standpoint and say that more than what I think is wrong with charity has nothing to do
with blockchain.
Blockchain at all. I think it's literally how we look at the companies. And, this is where you and I kind of started to click when we first were becoming friends, is that you look at a for-profit business model. What can they do? They can spend hundreds of millions of dollars in R&D, fuck shit up, get things wrong to try to be innovative and produce something new. The charity sector, we really try to hold to this different standard than a business model. And we're like, oh, well, hey, you spent too much money on marketing this fucking quarter. No company's CMO is going, hey, guys, we spent too much money on marketing. And one of the big problems is if you want to bring in more revenue, you need to be innovative, and you generally need to market the shit out of what you're doing. And a big part of the problem is, okay, well, let's say we raised $1 million for a charity. It's like, is it better to just give that $1 million to the charity, or spend that $1 million on marketing and then raise $10 million, right? And I think that often what we've done is we've tried to hold charity to this different functional light, like that they're supposed to be able to build a business that's helping other people without being a business. One of my favorite is this marriage between the for-profit sector and the non-profit sector. I really like what Cotopaxi has done. I like how they're like, look, guys, we sell great gear for good, and then we spend all of our marketing budgets. And that's what we started to do with the Arcane Bear too. It's like, okay, well, we can be a revenue-generating business that we don't need to ask for charitable donations, so we could constantly make contributions back to the world. And I think more than technology, is that we just need to come up with a more like insightful way to let these charities have more of a business or capital mindset, to give them the capability to experiment, spend money on marketing and advertising, to produce more
Right.
for the end result.
I can't tell you how many times we've had the Cotopaxi conversation.
I love Cotopaxi. Like they're just such a shining light of taking. Well, there are obviously other companies that have done this as well.
Yeah.
A lot of them are adventure companies like Patagonia. A lot of their stuff goes back to 501(c)(3)s around nature and stuff like this. But what I love about Cotopaxi is that they prove that you don't even have to be within your sector. They're like, hey guys, we're not even going to help nature. We're just going to help random people through random events. And they've done fantastic. They were up against Kathmandu and Patagonia, and no one expected them to get market share. And they do $500 to $600 million a year in revenue by focusing on, hey, look, we make a gear, and when you buy this gear, we spend our marketing budgets on doing good for other people. And they really honed in on this niche and this idea. I just think they're such a great shining light of, they didn't think, oh, we need to focus specifically on like saving the trees or the dolphins. Like I've seen campaigns where they go out, they find a random family like in Bolivia whose father is dying of cancer, and they'll fly him up to the United States, they'll cover all of his cancer treatments, and that's their marketing budget. Wow. And they really proved that you don't even have to be niche or sector specific. Just do good with your brand, and the people that care can figure out if you have a good enough product.
What a change from like a couple decades ago when the typical form of marketing was the Coca-Cola, drink our product and you'll feel better. And it's like you
Polar Bear too.
Yeah, exactly. Yeah. Whereas like today you can actually like go out and buy a product, and whether it's a seismic impact or a micro impact, in this case, you can know that you're actually consuming something you probably would already have, and you can actually help people instead of spending extra money on the products you're buying to cover for Google AdWords campaigns or like general market advertisement or celebrity endorsements. It's like,
it's
so old school. Yeah.
My favorite sentiment there is, don't tell me how good your product is, do good in the world, and I'm smart enough to fucking figure it out. Okay, so the next one here is from Quiet Moods, and this one I think is for you specifically. It says, hey Nick, I've seen you talk about Neo and N3 mainnet soon. Any thoughts?
I'm assuming if they're talking about Neo, they're talking about the Neo blockchain. So I have a few different participants I know within the Neo blockchain space. I was really kind of adamant about the Neo blockchain. They were the first real like potential competitor to Layer 1 when it was Ant shares.
Yeah, that's what I see. I invested in Ant shares because like, wait, okay, so we've got contracts in English for smart contracts. We definitely need Chinese contracts because you don't, when you write a contract, you want to generally have it written in the language you speak. So that's why I didn't even know if that was the case, but I was like, that's why Ant shares made sense to me. I was like, great, Chinese Ethereum, I'm into it.
That was the narrative, that it was the kind of the China Ethereum killer and stuff. And then, but on a technical basis, some of the things that stood out at the time, it was the first actual like one of the major first programmable blockchains, probably alongside NEM and a few others, that would offer like multi-language support and languages that weren't Solidity. So
language you can read. You're talking about like a legal contract, but basically, right?
Yeah, very like a lot of like intent, like well-known languages like C. Well, I wouldn't say it's the most well-known language, but languages like C# and stuff. But the overall thing is that you could actually have traditional developers building on it. And I'll say this very bluntly, and I think most people in the Neo ecosystem would agree with it. You just couldn't build on Neo originally, like the first Neo blockchain. Neo 2.0 still is not a great ecosystem to build on. But Neo 3.0 is coming around the corner. And I know that one of my favorite connections in the space and stuff, John Datadash, he's been helping in the Seattle, some of the Seattle operations for Neo. And they're trying to build out a whole suite of developer tools. So yeah, overall, look, I don't have much of an opinion on it. I don't keep as up to date with it as I used to. But at the same time, I'm always interested in this market where Layer 1s have been popping off and stuff. I'm definitely keeping an eye on it. I know it's been picking up over the last 2 or 3 months against Bitcoin. So
okay, well, this question here is specifically for me because I don't think you're going to have too many comments on the answer for this. But Mario Silva says, what are your recent thoughts about the low volume profile of the upthrust or UTAD for the test of Bitcoin in the so-called Wyckoff distribution? Well, first off, Richard Wyckoff is a fucking gangster. I'm glad that at least more people are starting to catch on how brilliant that stuff is. His heuristic about Compman is absolutely genius. But this is a good question, and we've gone over it a bunch of our videos, which is that I think normally when you get a UTAD or what stands for upthrust after distribution, which is that you go up outside of the trading range and then you fall right back into it really quickly. Normally when the market is over, which is like what you can have these very deceiving moments in the middle of the market where you'll have a distribution moment like this, but it's not the end of the market. Like back in August, we remember when we went to 12 grand and then came back to 10 grand.
Yeah.
There was a trading range there where it was like a beautiful distribution trading range. But who cares? Who cares if it's coming down a little bit before it goes up 10x? If you think that this is ending the market, you're basically wasting my time, right? So a lot of the times what we get wrong is in these subtler distribution moments, people get scared out of the market at that moment because a distribution should be the end of the market.
Exactly.
Because market cycles are two. You've got an accumulation range and then a distribution moment, right? So within the accumulation range, you'll see smaller distributive moments, but they don't necessarily mark the beginning or the end of the cycle. And that's really only what I'm interested in. I want to know, when did the market start and is it over yet? And to answer your question here, Mario, I think that the lack of volume, so normally on the way up, when the market is over, in the upthrust, what you get is a massive amount of supply coming into the market on the upside first. And we didn't get that. We went up on very, very limited supply, which is a bullish signal technically. When you can go up on limited supply, it's because there's no supply left in the market.
Yeah, what happens when there's actual like serious capital inflows?
And that's usually what happens, is at the end of the market, it's signaled by a massive amount of supply into the upthrust, and then the distribution comes from very little supply. And they're like, oh wow, so we've just gone down X amount on limited supply, but we've gone up. We tried to go up, could only go up on like just the volume is like peaking out. It's abnormally high. So for me personally, this Wyckoff distribution, what it represents is that means the bull market is not over. That's what it means to me. And that's usually what we look for, is the bull market over or not? And I don't think it's over. So good question. Okay, here's Brado Jacko says, oh, you brought this one up on earlier, so we'll let you lead here. Brado Jacko says, thoughts on the announced summer U.S. crypto regulation?
Oh, yeah. So, I mean, if it depends on specifically like what crypto regulation, because I've heard that there's some like new statements from the IRS about like tax laws related like transactions over $10,000, but I probably need more details about the specifics of the regulations, because I mean, there's kind of so many regulatory talks every day. I barely keep up with it, but I mean, I keep up with it for my business or anything like in regards to operations. But there's been so much kind of like talk and stuff overall and stuff where it's like, oh, you know, the tax authorities want you to report this. It's like I've always just paid my taxes on crypto and stuff if it's due. And then outside of that as well, in regards to regulations, I make sure to use platforms I know are compliant, or make sure we meet compliance with our platform. So, yeah, I don't know exactly, again, like which specific regulations go. Do you know what they're talking about specifically?
No, but the sentiment we both talked about was the summer, which basically means so when the bull market is pretty much over. Exactly. I mean, I'm a big fan of Cliff High. Now, a lot of you probably follow this channel because of Cliff High. It was one of the first big podcasts we had. But in 2018, one of Cliff High's Alta reports was like, we're going to run to $64,000 and then drop like 30 to 40%. That's what he said in 2018. And lo and behold, hey, we went to $64,000 and then just dropped like 40%. But he also talked about $100,000 Bitcoin in August, which I think seems very likely. So that's probably pretty close to the end of the market cycle. I think now that the bigger players are here, we're not going to see a massive crazy wick out through the top. That we'll probably see a much closer run into the stock and flow model. I think there's just people here that are smarter, they know how to play, they've got more money. So we'll probably go up to like $120,000, and then we'll spend 2 to 3 years accumulating around the $100,000 mark. So I think one of the most important things about the U.S. regulation coming in after summer is that they're going to wait till the bull market's pretty much on its way to being over, then introduce it so that as the bull market comes to an end throughout October, November, the regulations that they bring into place are actually set into law for the next year. Yeah, because they take till the next year to actually put it in. Like everyone's like, oh my God, the tax is going up to 41%. No, they're going to take a year to do that at least, right? Yeah. They're talking about it this year. It's going to take till next year, so you've got time to try to figure it out. They're not going to just kind of pitch these regulations like they'll know by summer. They'll usually come out with what they're looking for. They'll get guidance from other people. They'll take till like December to figure it out, and by January, February, first quarter of 2022, they're looking to actually instigate those regulations when the bull market is finished and we're on our way into another accumulation area. Well, Nick, that was great. Thank you
Yeah.
all. I want to make sure I didn't miss any super chats. Okay, good. Thank you to everyone. I've got to give Nick a ride back to his home here, and there's driving regulations. I'm not allowed to drive my truck past 9 p.m.
What
apparently.
a world.
Yes, the world we live in today. I'm like a little baby. I can't drive past 9. But thank you. I had a
Yeah.
great time.
Dude, it was so
It's
nice to
always
be
a
here.
pleasure to see you.
Yeah.
Bear
Thank
family.
you guys.
You guys are awesome. This is Tio, Nicholas Merton of Datadash and the Arcane Bear, and we've got a Jan over here helping us keep everything in check so we don't do anything too stupid. Thank you guys all for joining us. We will see you again on the next episode. Awesome. Yeah, lots of fun. Thank you.
Yeah.
Appreciate it.
Yeah, because we're consistent.
I love the color scheme you have on your chart.
Yeah, the blue and pink kind of stuff.
Yeah.